Hi there, traders. This is Brad Gilbert with today's trading action. All right, as we come into the start of the Asian session, we do have a bit of a risk-off sort of profile here on the equity markets. It's filtering through to the euro and sterling, but not the Aussie and Kiwi, right? So a bit of lack of uniformity there with that connection. I wouldn't say I'd be trusting it at this point. Now, the key thing over the last 24 hours has been US Treasuries have just backed off a bit, right? That huge surge we saw on the US Treasuries, yields going up, they've just backed off. And what that's done for us is it's just backed off the move on the dollar. And I'm not surprised, right? Because today we have one of the key inflation numbers, the PCE price index. Now, saw that surge in the dollar. This is the dollar index back to that previous resistance line, which is sort of acting as more like a pivot point now. And you can see exactly how these trend lines are working on euro, right? So dip down, back to the trend line. So to me, the way we look at this is like a bit of a flush out of the markets of positions in the lead up to a big number. Now, the one standout across all these pairs is dollar Swiss, right? It's just gone down. Okay, so there's something in play here. If I just switch to the daily charts, you can see it's just tweaking through this level. We do have a previous low here, which may or may not come into play, but the rest of these major currency pairs, right? Obviously, the US dollar in play today with the US data, but we do have most of these instruments inside recent ranges, right? It does create opportunities if the data is somewhat variant, but we'll have to wait and see, right? So to me, right now, just looking at the markets, I really like the idea of a dollar clean out. Dollar Swiss is leading the way, and that could see, sterling, euro, all pop topside if the today's data is weak. The likelihood is stronger numbers, right? Because we've seen a lot of stronger numbers over the last, month or so. So if we get stronger numbers, what do we expect, right? Well, dollar Swiss has got to come back into the range, and we should see downward pressure here, euro, sterling, Aussie, Kiwi. If you have a look at the hourly charts is where you'll be executing from, right? It gets a little bit messy because there's not a lot of trend lines around. If anything, you would be redrawing some of these trend lines to those new levels. If I just wait for that data to pop up there. So you really are just focusing on that previous or that new low, right? That's what you're sort of really looking at. If I just let me just get a ray on that one, not a trend line, because and this is the danger. If you put too much credibility in this, right? When we're looking at this, right? So you've got the previous say support line, right? That's acting as support. When it breaks through, it acts as resistance. Then you just want to make sure, because this line just focuses on that level. It's only got 2 touches, but it's the only level we've got. Really strong US numbers. I'm talking stronger than the range would see this lower, and you're looking for either to get in at market or through these technical levels. But the key to it is just redraw your trend lines. Make sure you get them drawn correctly so you know the exact levels to get in. Now, just coming in, checking this data, right, give you a bit of a heads up. We just got some private sector numbers coming out there out of Australia. Nothing special on those numbers. You got retail sales out of Germany, right? Bit of a lead up. If you're in front of the screens, just check that out. But this is what we're looking for, right? There's a few things coming out. So the PCE price index numbers are sort of key to it. There is some personal consumption, personal income as well. Just keep an eye on those, right? But really, it's the inflation numbers that the market's sort of really gagging for, right? What we need, ideally, to get a nice, easy sort of trend in the dollar, because it's just whipping about at the moment, is something outside the general range here of the forecast, right? There's your range for the data, and the PCE price index, check that out. It's tight as, right? And same for the month on month. So we'll just see how those numbers roll. You know what? The market has factored in higher yields. It'd be great to get a weaker number. And I say that because if the market's gone in long here into the dollar in the lead up to this, if we get a number outside the downside here, we could really see a flush out of longs, and then the market will start factoring in potential earlier rate cuts from the Fed. It's a bit of a stretch, but that's where I think where the raw nerve is. The market is expecting strong numbers. So expect the unexpected, plan for both, connect the technicals with the fundamentals, and we'll see how the damn thing rolls when it comes out. All right, you can catch me for that live trading session, all the members who are on board, and we'll see what we can do with the numbers. All we need, this is one thing that you just got to focus on. Trading, we generally know where things are going. We just need these damn numbers to fit in with the current movement that we can see, the technical picture. That's where the easy trade is. We're not just trading the outcome just for a laugh. We're looking for something that's going to give us, like a good, say, medium-term trade. And what I'm talking about there is like 100-pointer, right? Really add some cash to your account. That's what we're looking for today. All right, guys, have a good one. All the best. Cheerio.